Thursday, September 7th, market analysis, Stan Ehrlich. Good morning, 9:52 California time, a little bit after the middle of the trading day, about when I usually do my Zoom recordings. So, I start out with the stock market indexes, and typically speaking, the S&P 500 SPY, the spider, and we are in the process of developing the final stages of what appears to be a damn good looking head and shoulder top formation. The last shoulder high was just simply last Friday, and we had engulfing bars, although they're not necessarily in the right direction. But I nicknamed them bass backwards because they normally look bullish. But under the circumstances, the commentary that I had before Friday of last week has turned out to be pretty good so far. Now, on Tuesday, Monday was a holiday, we dropped off a little bit, not too badly, not too much, but we did have a new low for a couple of days. Now, yesterday, the market gap down on the opening and never closed the gap. So we have an official gap that needs to be closed sooner or later, probably closed sooner or later. Are we rallying right now up to close that gap? I doubt that. It may happen in the next day or two, and that's about as much of a rally as I can expect, if any significant amount more than what we've already had today. So opened today in new low ground completely and bottomed out and started to come back up some. But look, we're still down 1.7 at the moment, net change. We're not particularly close to being overbought or oversold, one or the other, very neutral territory. Anything between 40 and 60 is pretty much the neutral territory, doesn't mean much. And that's where we're at. So a little bit more of a rally to close the gap could happen, and you'll see that that's relatively important in some of the other indexes as well in a moment. But at any moment, I think it could turn down and make new lows and start dropping. Now, as that happens, and that's exactly what I expect. What's today? Thursday. So let's say by the middle of next week, I think we're going to go below today's lows, at least by a little, if not a lot. Remember, bear markets fall much faster than bull markets go up. Bull markets climb a wall of worry, and bear markets are panic time. Not that this is a bear market. I do not want to lead you in that direction whatsoever. The minimum downside objective at 407, approximately 408, let's call it a little below 410, is simply in the ballpark of a 50% retracement, a Fibonacci retracement from the October lows, which we did get a bullish ER buy signal at the bottom of the market to the day. And so far, we have a sell signal on July 27th, the top of the head and shoulder top, if this works correctly. Period. So both major turning points. I'm pretty happy with that. So now what to expect? Again, we've already dropped off pretty sharply in the last couple of days, from high to low in particular. And a bounce to close the gap would not be unexpected, but certainly by the end of next week, I think we're going to see lows lower than today's lows. And that would perpetuate the head and shoulder top. And then we're going to come down to the neckline. Maybe it'll take another week or two. Now we're talking about the middle of September, third week of September, and we're starting to get to the neckline. If my timing is anywhere close to being correct, and we do break the neckline around the middle of the end, last couple of weeks of September, we're going to drop into October. What happens in October? The market frequently, the last 3 decades plus, approximately, I'm going to say, and I'm being very generous here, 85% of the time, and it's probably better than that, has had some significant buying opportunity, not as beautiful as last year, the October lows with the signals and all that in the formation, but typically some sort of downside correction from September, even August. In this case, it would be late July into October. So let's see what happens this year. So far, so good. Anytime now, like I said, I wouldn't be surprised if it starts to just plain drop off, period. But there's that gap. You got to keep your eye out on that and see what happens if we can get there in the first place. Okay, enough of the S&P 500. You know, the DIA has the same damn gap, but it didn't drop off that much, that quickly, and that far, etc. So today we are already up 70 cents, and the high of today is already pretty close to closing some of the gap, which was a gap down yesterday, just like the spider. So it's a lot easier to close the gap in the DIA. So that discrepancy, we'll see how that pans out. And sure enough, this morning we gapped down on the QQQ, and that is this chart right here. And that formation has a downward slanted neckline instead of an upward. So it's going to take a little longer, a little farther to get down to the neckline. And it's a little bit more bearish because the neckline keeps on lowering and lowering the downside objective as more days pass before a breakout. Nevertheless, everything is working just perfectly here as well. Lastly, in the Russell 2000, we have the same pattern as you would expect. This is a very nice pattern. It's June, 1 month in the middle of July, another month in the middle of August, and we're almost into the middle, not quite, of September. So it's 3 or 4, months long, which is very typical for Head and Shoulders. Small would be less than a month, and they certainly exist. Medium size would be a month, 2, 3, 4, just like this. And if you're getting larger than half a year, more time frame, then you're talking about a pretty big formation, which is exactly what we had at the end of last year for the bottom of the bear market. Now, the Russell has a downside objective that is all the way down to the lows, very, very close to the lows, at the lows of this whole long-term, multi-year bear move. Huge, major support. I've got a big dot dash line, red line here, underneath, connect to the two lows, almost perfectly flat. They're almost the same prices, and that is almost matching the minimum downside objective, just a little bit more for the Russell. It's something to be very aware of. All right, let's go look at futures. And first, the E-mini, of course, the S&P 500 is basically the same thing as the spider. There aren't many differences, but we did get 3 sell signals at the top of this market, including the highest high, like the spider, bearish engulfing ER sell signal, bullseye. Unfortunately, not on the shoulder and not on the shoulder. If I'm going to have only one, it would want to be the highest high. Down we come. Let's see what happens with the neckline and all that stuff. I'm forecasting a few bumps and grinds here, pretty much into the October lows. Next, NASDAQ. Same formation, have not on purpose outlined the shoulders. We did have a couple of bearish reversals during the process of topping out, but unfortunately, they weren't the highest highs. Bad buy signal right there. So we keep an eye out on this, of course, the NASDAQ futures. NQ. Next, bond futures. This is going to be very, very interesting. Why would bond futures show me a head and shoulder bottom developing, and now the second 2.5 days, it looking good so far? All we need is the beginning of a rally, and we're not doing that really. We're up, what is it? 1 tick. So it's unchanged, and it's a doji. It's an inside trading range. They usually don't mean too much. But if we do start rallying, you're going to see the shoulder develop more obviously. I've got the neckline in already, and I've got an upside objective, give or take a little, depending on the day it breaks out. So that's well up into the major resistance area, but that's a rally in interest rate futures, which implies a decrease in interest rates or an expectation of a decrease in interest rates, which the stock market usually likes. And I'm telling you, I think it's going to go down for the next 6 weeks. So this is going to fail, maybe, and drop off to make test of lowest lows, probably, and then drop in a new low ground to some degree. If this shoulder does not work out properly, That's exactly what's about to happen. And that would corroborate some bearishness in the stock market about expectations of maybe a little bit more interest rate hikes than expected at this point. That last shoulder is going to be very interesting in the next few days. Going to, the end is coming. So, or the beginning. The same formation exists not quite as nicely in the 10-year notes. End of story. Absolutely all same commentary. Crude has gotten very strong the last few days. Overbought conditions, substantial overbought conditions. In fact, I did this yesterday. The last time RSI got up to 86 approximately was the top of the market in June 9th of 22. When we have some bearish engulfing ER sell signals, of course, that's nice. Say worked out pretty good, pretty good. And it was the second high on a broad double top. Gotta love it. All right, so overbought conditions imply it's about to start to swing down, and it is. How far? Well, there's support now where there used to be resistance, and this support area is going to make it probably stop going down and turn back up. I'm sorry to say, I think crude oil has started a bull trend. So I'm looking for buy signals, maybe around 20 or 83, 23 to 8209-ish, somewhere in that ballpark. Next, heating oil. It kind of looks like it's topping out. I don't have a lot to say about it. I realize that this looks like a sloppy head and shoulder, but I'm not even going to go there. It is in a major historical resistance area. So if I start to see new lows here, I think it will eat down into this support area and maybe break below it. I'm not real solid about my ideas at the moment on heating oil. Next is natural gas, bouncing off support like I expected very nicely today. And did not get quite oversold enough for a signal, but the other stuff looks good. I think we're going to close that gap, and that means you're going to go up to 2.734-ish. Next chart. Support is also holding second day in a row in gold, silver, and platinum. Those three precious metals have been just so good to us this year. It's ridiculous. Major turning points, that bottom, this top over here, February of this year, that bottom right there, and February 28th of this year, just great. It even gets better. So hang on. I think this is going to make lows lower than today's lows and yesterday's lows soon. A little bounce maybe first, but maybe not. And I'm looking for a test of the lows of 1,912-ish. Next chart. We got a sell signal. It's working fantastically on silver. Just a few days ago, been down big 2.5 days now, right after that sell signal. We also got the top of that rally. We also got both highs on a double top formation, unheard of. We got that bottom, that low. We got that major bottom on a green bullish engulfing. And that goes back to March. All right. Looking for a test of support, and that would be 22.7-ish. I should draw in a support area there. Yeah, I did. Okay, I just got to raise it up a little bit. Yeah, that seems to be a little bit more significant. All right, so that's exactly what I'm expecting. And we may get over, yeah, we're going to get oversold by the time we get there, and nicely oversold. So it's going to probably bounce off of the red zone in a few days. Next, platinum, fantastic sell signal, fantastic buy signal. Sell signal in the middle of a double top. Too bad it wasn't the highest high. We got the lowest low, and we got the highest high. That goes back to January 11 of this year. Most of the major turns. So the last one has been really, really good. We're still making new lows and new low closes, but we're getting close to oversold. So I think this particular drive to the downside is about over. We're coming into a support area. I'm expecting it to turn back up probably for a little bit of a rally next week, but we could get a little bit lower first. Next, high-grade copper. A lot more of the bearish, I meant neutral actually, commentary, but we did catch that bottom. We caught that top. Two great signals lately in copper. Next chart. Beans. For months now, my commentary has been in reference to whether you're looking at a very, very long-term top forming or you're going to start another huge bull market, which seems a little bit difficult to believe, but I've seen it happen. So right now we have a bit of a dip today. I'm kind of flat neutral. I'm waiting for some signals. I realize it could easily dribble off to about 13 to get back into that blue support area again, like it did a month ago. And the last rally failed on an upside exhaustion gap with it being overbought, and that was only a week and a half ago. I need higher highs to start to get super bullish, and it would be super bullish. And if it does make it under the blue zone and drop down to 1280 or lower, then I would be expecting a big move down to the bottom, which would be 1070. And that gets to be incredibly bearish long-term if you can get below that. But that's a long ways from now. Bean oil, nice little break today. It's got support below the market, but you should be very much aware of the double top formation. We also got a sell signal smack dab on the high day. That's a good one. And a buy signal on the smack bottom of that break. A few prematures, but that made money. That made a little money, and that one probably not. So anyway, double top. That's the important thing now on bean oil. And if we do break below the red zone, the support level, we're going to drop down to something in the neighborhood of below 50. Next chart. Meal. Major resistance has stopped 3 or 4 different major rallies in the last 3 months. I do expect a test of 380 soon. It has been coming down from a test of resistance in an overbought condition, and I talked about that probably 1 to 2 days before the highest high. There's no change of opinion, so I'm looking for tests of support, and if they don't hold, obviously that's a lot more bearish. A lot more bearish. Next chart. Corn. It's already started to make lower lows. I think this rally might have even fizzled out already. I think I mentioned that kind of yesterday. I can't tell. It might even rally still up to about 504. In the meantime, it could just simply start falling apart any old minute. I got no faith in any rallies if they occur to start with. I would be looking for a new short if I got a rally anywhere around 5, frankly. Next chart. Wheat. Pretty much the same commentary. New lows, long period of time since the war, well before the war. Which, by the way, we did get a sell signal smack dab on top the day the wheat market topped out. Unbelievable sell signal. I can't, in my wildest dreams. Okay, fine. So, yeah, I think we're going to see new lows probably easily next week, if not even tomorrow, maybe. Next chart. Cattle is not a head and shoulder top anymore. I said that yesterday. I thought it was progressing nicely, but it has had too much strength, way too much strength in the last 2 days in particular. Now I have to go back to a sideways trading range in a bull trend. Normally that busts out to the upside sooner or later. We are close, very close today to being overbought. Not quite there, but super close. Therefore, this would have turned yellow if we got up a little bit more on RSI. And by the way, RSI did get to a high of 74.85. My RSI overbought is 75. So I missed by 15 hundredths, which is super close. I'll take this as a light yellow, little joke. Double top, maybe. Probably close to the rally high for the moment. So I think this particular move to the upside is almost over, and I'd be looking for a little bit of a pullback, but I can't say much more than a bull market. Yes. Major support held Yes. New highs for a month and a half. That's pretty good. And there's only one other high to take out. The only minor problem I've got for the moment is overbought, so I expect a little bit of a dip next chart. Hogs. Neutral. Next chart. OJ. We caught the second high in the double top with a bearish engulfing red signal. Got to pay attention to these red and green bars. So, and that high too on red. Okay. A little bit higher high today. Couldn't hold it after the opening, probably, and started to pull down to lower on the day. I'd love it if it got below yesterday's lows. I don't think it's going to do that. That's a bearish engulfing. I know it's not a sell signal and not going to turn red, but better than anything else. I think this is going to start to make lows lower than 310 real soon, next few days. And then we have a bearish breakout of a double top formation, and we did get a sell signal on the second high. If we start closing below 303.90, next chart. Again, double top cocoa. Bass-backwards reversal, meaning a bearish engulfing. No, it's a bullish engulfing, but it was overbought. And it tested significant resistance the previous high. I believe cocoa had a high on this day only 2 ticks higher, 3,697, than the high on the previous one was 3,695. That's 2 ticks in new high ground, and all of a sudden failed badly. Bearish engulfing at some point in time during the day it was, but it managed to close on strength. No follow through though. And today, the start. So I want to close below 2 days ago's close, Tuesday's close. That's going to start to prove to me that the bass-backwards reversal and double top is starting to work pretty good. Next move down is seeing if we can bounce off of support at 34.85. Then you're going to get some support out of 33.90 and then the neckline. Or I meant to say breakout, sorry. This is not a double top formation. This is simply I'm going to put the line right here, a bearish breakout of the formation, which is the lowest low between the two highs. Look at this. My bearish engulfing produced a huge move down the next day in cocoa. And not only that, but I don't remember seeing it being overbought one day at its high of the day, the rally high, and then oversold on daily data the next day. That is one whopping decline from high to low in, call it 24, 48 hours. Incredibly big. Next chart. This is topping out, in my opinion. Next chart. Coffee. Going to break support. Not going to hold up. Trend is down. We're going to see this thing start to plunge a little faster. If we start to close below the bottom of this green bullish engulfing, which was on a bottom, not very big rally. Not that this one was a lot better. And that red one was great, just barely in time, by the way. And a couple of false starts. So coffee, next one's cotton. New high ground, or bought, not unusual when you start to get into new high ground. We settled back a little bit yesterday and lost the overbought condition for today's market. And now starting to come back up again. We did not do any damage to this bullish breakout. In fact, we're looking like a likely weekly bullish breakout also on Friday's close. We'll see what happens. I have to be turning bullish here. Very little ifs, ands, or buts about it unless we start to break below these lows of the last day or two. Next chart, and our last one. False upside breakout in overbought conditions. Now we're dropping much faster, like I've been talking about for at least 2.5, now 3 days, I guess. I'm looking for a test at a minimum of 83.50, and then probably down to 76.70. Thanks for tuning in. Appreciate your time. Mañana.